Do you see the momentum continuing?
That's a timing question. What I see is that the macro is very resilient, and there's no reason for the stocks to turn down for as long as we have such a resilient macro economy. We have, of course, AI is super powerful. You know, I'm starting to think that AI feels a little bit like QE. It's almost like unconditional liquidity coming to the market all the time.
QE can cause too much.
QE can cause too much.
Can cause problems.
Exactly, and that's the conversation we want to have with our clients. Is don't get lulled into it.
But that brings up a lot of questions about the association or the ramifications of increased productivity. And that has to do with fewer people. And if there are fewer people needed, then fewer people will be working. And it opens up this whole question about what that economy ends up looking like.
Yeah, absolutely. I mean, honestly, this is really still far out. So we're going to take it one after the other. For now, what we're seeing, and you can't disentangle, the normal economy with what's already coming from AI. But what you see is unemployment rates are still low. The growth is still strong. And so let's take it one at a time.
Are you talking unemployment U.S.
Unemployment U.S.
Okay.
And on this, you have to also put against the AI trend that's allegedly going to take out so many jobs, the fact that the demographics in most parts of the world, let's say of the developed world, are also pretty negative. So I'll wait and see a little bit on this one.
Christel, you guys are a global wealth management firm. You're based in Switzerland, right? And I'm just curious, I'm looking at the MSCI World Index up about 7% year to date. World Index ex-US up about 6.5%. S&P is up 8% year to date. The NASDAQ 100 is up 15% year to date. Emerging markets are up 22% year to date. I didn't even break it down in terms of European markets and so on and so forth. You can presumably look at the world. Which parts of the world do you like the most?
What I like the most? Diversification. Honestly, that is the conversation to be had.
So what is diversification from a global perspective?
So I'll tell you what is the conversation that I want to have with the clients is about 3 C's: concentration, currency, custody. And the concentration is that we have one of the largest markets in the world, the US equity market, which has a third of its valuation in 7 stocks. That's a historical high. And that trend is so powerful that you actually find it ripples into other asset classes. You have corporate debt from tech firms now. When I left managing fixed income, there was no debt from tech firms.
That's
and
right.
now there is actually quite a substantial amount.
Is that a problem, though? I mean, great. The debt markets largely seem to like it.
Yeah.
Right? They're investor interest. But I do get a little nervous. These guys have deep pockets, lots of money. I don't know.
It's not a problem per se. It's just as an investor, you don't want to have all your eggs on one theme only.
Yeah.
So pick your theme. And if I picked one, I'd pick the equity part probably for the AI because it's a growth story.
So underweight or overweight US?
Oh, what did you say?
Underweight or overweight US?
Neutral? Can I say that?
Yeah, you can say neutral.
Yeah, I'd say neutral, to be honest. I'd say neutral, but I wouldn't be underweight. So it's a neutral positive.
So are you then skewed, because I know what you said about market concentration here in the U.S., but you like the AI play. So are you skewed, though, towards those big tech names?
This is not, in a sense, I mean, it's a very hard call to be made. I think what I'm skewed toward is saying the macro theme is real.
Okay.
You don't want to over-concentrate around that.
Oh, okay.
And this is precisely the conversation we're having with the clients, is where do you express that view, how much, and what other asset classes, other geographies, other currencies you want to hold. Because ultimately, remember, the key call for your wealth is how you allocate across assets, geographies, etc. It's the most underrated call.
Even with the decline of energy prices that we've seen in the past few days, oil is still up more than 65% this year. Could that derail what you view as a resilient macro environment?
It could if it lasts long enough. And I don't know. You're going to ask me how long is too long. Yeah. I don't know either.
We'll know
what that is.
But
we'll see it.
the exposure in Europe, certainly in Asia, to this conflict that was started by the U.S. and Israel, they are feeling the pain more than we are.
Yes, that's true in terms of the energy dependency. Yeah. I would say the consumer headlines might actually be stronger in the US because of the tank, price at the tank, which is always a very sensitive topic in the US. But yes, you're right. And the longer it lasts, the more it will have an impact on the economy.
Is there another market that you like, though? I am curious. Like, we've talked a lot about defense spending that seems to be increasing throughout Europe and other places. You like it. It's very clear you do like the U.S. market, but you're kind of neutral.
I like the fixed incomes as well, to be honest, because I didn't buy that argument in 2022. This is the end of 60-40. I think it was just
I feel like it never goes away, even though people talk about it.
No, it was a nice reminder that rates can go up, and in that period when you cool the economy, everything goes down at the same time. Doesn't mean we want to do without. And the other part that I like is can you do something with the volatility in the market? And I think you can.